You are the asset. We have to get you right mentally and physically. There's no reason to build wealth if you can't enjoy it and be around later in life and put priorities ahead of money. Money matters, but as we say, money is the easy part. So let's take care of ourself, our marriage, and our parenting relationships, and then build wealth.
How do you find the will to fight back against a world that wants to keep you sedated, average, and stuck in place? Join us for the tools and strategies you need to create a life of abundance, discipline, and high achievement. This is the Tactical Empire with Jeff Smith.
Welcome to another edition of the Tactical Empire. I am joined by Sean Ryder today. And Sean, I think today we have level 3 of the 7 levels of financial freedom. Is that correct?
That's right. I'm good, man. I'm good, man. You're going to have to start addressing me as Sean Ryder, the pickleballer, because I picked up a pickleball paddle for the first time 3 weeks ago, and I can't stop, won't stop. I will go out there on the courts and be humbled by every 65-year-old woman in this town until I can win a game. I'm getting after it and getting my tail whipped.
Yeah, I don't know how I feel about pickleball. We lived in a very Jewish community right by the Jewish Community Center in Houston. Our house was, and they had full-on pickleball courts right near our house. And at first, when we moved there, which was like 8 years ago, 7, 8 years ago, it was just like super old people, like you would expect. And then the evolution started, I believe, and it got more of a craze of the younger generation. Yeah, I don't know, man. I can't budge on it yet because I'm like, that is a game for old folks. It is a game for old folks. So we may have to talk some shit about your pickleball career and prowess, because I think there's a reason that is a game for 60 and over.
Get out.
Is it the weakening of the American society? Ooh. And are we just broadening the weakening of society through our sports?
I mean, you can't tell because I'm wearing a white shirt, but I am soaking wet in sweat because I just played for an hour and a half in the sun. But I could view it two ways. One, like, first of all, I never talked smack on pickleballers, but I didn't understand what the crave was until I walked out on the court with my brother 3 weeks ago. I was like, oh crap. Okay, this is actually really fun. And like, I haven't done anything competitive in like 6 or 7 years. So that competitive spark got lit a little bit in me. But we can view it two ways. One, it's awesome that elderly people are moving and exercising. At the same time, number two, like, none of them should be twisting, turning, bending over, and lunging the way that they are. And like, actually, when I was leaving today, one of the older gentlemen that saw me out there for the past week or two, he goes, you're addicted now, aren't you? I said, you'll see me back a few days. And then he laughed. He said, well, we're all in therapy now because of this. I said, depends on what type of therapy you're talking. He said, all of them, but he meant physical therapy. And I'm like, in the back of my head, I'm like, y'all shouldn't be in physical therapy because like pickleball is their only form of exercise. They should be doing other things to be able to play pickleball. Anyways, sidetrack.
To that point, yes, I definitely encourage any sort of physical activity, and I could see the competitive component to it.
They're awesome, dude. These old men and old ladies, they just stand still and they whip that thing. So it is tough. But yes, we are diving into the 7 levels of financial freedom, which is our flagship product that we educate people on at the Tactical Empire. If you haven't listened to the first couple episodes, they're just the episodes prior to this one. We went through level 1 and level 2 in the previous 2 episodes. Level 1 is you are the asset. We have to get you right mentally and physically. There's no reason to build wealth if you can't enjoy it and be around later in life and put priorities ahead of money. Money matters, but as we say, money is the easy part. So let's take care of ourself, our marriage, and our parenting relationships, and then build wealth. Level 2 was figuring out your BAM, your bare ass minimum. Go back, listen to that episode. Now, level 3, again, all of the first couple levels sound easy, so do not skip over them. They are vitally important, and they're probably a bit deeper than what you think they are. And this one being one of them. So level 3 is liquidity. And liquidity is how easily you can turn something into cash. Okay. So very quickly, people just think, okay, that's my money in the bank. Okay, that's maybe some stocks that I could sell today. We're going to expand that definition and talk about a few other things. But Jeff, let me toss the ball over in your court. And when you're teaching men and women about level 3 liquidity, where do you go right to?
Well, it's just recognition of access to cash. And I think people oftentimes only look at it through the lens of like what's in their savings account or what they could immediately go access, which is what liquidity is defined as, of course. But I think that the recognition and understanding that you have access to more cash than usually you think you do, whether it's equity in your home and how to open that up, whether it's equity in your vehicles. I mean, we've done some pretty unconventional things as far as like accessing cash if you wanted to, depending on the situation. Like if you have a paid off car, you could go refinance that vehicle. Now, do I recommend doing that? In almost all cases, probably not. But in some cases, if you have an opportunity to turn something into direct cash flow that meets or exceeds, and preferably far exceed the payment, then it's an opportunity, right? Then we talk about cash out refis on your homes or your personal residence, or liquidity you have in vacation homes, like equity you may have locked up in there, things like that. And then the benefits of a cash out refi versus a HELOC, and then which one's better. It's just a way to analyze what you're doing. Do you have things to sell? Like, I mean, I've got a bunch of firearms and things like that that are very high value. And so if I needed to go create cash, how could I do it? And it's simply just a recognition of, I guess, collateral that you possess and the equity that you have in what you've accumulated over time. And so whether that's like large equipment, I mean, some people have large equipment like earth movers and stuff like that that are worth hundreds of thousands of dollars, and are those paid off, paid in full? Like there's other ways. Do you have liquidity through your business? Is there business lines of credit open? We talk about lines of credit constantly because it's important to open those up and maintain them. You don't have to use them. You don't have to access the capital within them, but you have to open them in the good times, because during the bad times, you cannot get access to capital. And I mean, if you haven't learned that over the past 6 years, you haven't been very active with your finances, I would tell you. For most people, there's also liquidity in high early cash value life insurance, like we talk about, obviously, right? There's cash available there. Really, what we want you doing is taking a macro level view of your entire financial situation and what cash do you have access to? Okay, I've got 100,000 in my house or 500,000 in my house. I've got 50,000 in this car that I've got paid for, or I've got collectible cars that are worth a certain amount of money. Like, you don't have to sell your stuff. So like, people get real cringy and anxious when we talk about some of this stuff, but it's really just getting a full view of what you have access to, because there may be an opportunity that if you could open up $500,000 of cash, that it could change your financial future or your income. Like if you got the opportunity that if you could get $500,000 of cash, if it would return you $200,000 a year forever, would you try to go get that $500,000 of cash? Fuck yeah, you would. Everyone should, because like then it changes your financial future, because now you've got this full-on income stream coming in, like you're going to work, and then you have more options, right? And so the liquidity portion and the access to capital is really just for you to take a full broad view of everything you have access to and understanding those tools, because most of the people in the tactical empire are business owners, not at least 80-20. Like at least 80% of the people are business owners, meaning that they have access to lines of credit that they may or may not realize, right? Minimum $50,000 up to $1 million of lines of credit. Now, just for context, those lines of credit 3 years ago were at 4%. And so like if you could go get $200,000 on a line of credit at 4%, and you could invest it in something that was returning 18%, like it's a home run all day, every day. And so, but most people are so debt averse or loan averse because of the words make them sweat and just conventional wisdom, that they don't understand liquidity and leverage and things like that. And it's because their lack of education with regards to finances, their lack of comfort with regards to using some of these tools. Now, you don't have to be risky about any of this stuff. It needs to be fully palpable. If you're going to take leverage, meaning a loan, to buy an asset that returns something, it needs to be a very solid asset, not speculative, right? Because you're going to be strapped with that debt at the end of the day. So if you do it to go buy lottery tickets, that would be a very bad idea, right? What's your input on teaching this portion of things?
Well, man, you didn't leave any meat on the bone for me here. So let's see if I can pick the scraps up. No, you hit the nail on the head. What I liked most about, I agree with everything you said. What I liked most is what you said about taking the macro level view, because level 3 is basically the complement to level 2. Level 2 was BAM. So you had to take a micro fine tooth comb look at your personal finances, which is your money inflow, money outflow. Liquidity, at first glance, it's like, oh, my access to cash. No, we need you to zoom out farther. Where is all of your money? Not just your access to cash, your pent up money, your pent up equity. So this is more of the net worth view of your current personal finance. For most of the people we work with, they're still in the accumulation phase of life and they still need very strong active income. And so I want them to generate more income. I want them to maintain and control their expenses. That's how they can move the needle faster in a shorter amount of time. And so I'm not the biggest fan of net worth as like the end all be all KPI until we get through like level 4 and 5, where we're talking about return on net worth because of the assets you own. But level 3 liquidity is the first time where, let me say this, it's the first time where you're going to see people hesitate and question themselves as to why they were putting money places. So not only are we looking for your access to cash, we're going to get you to question why you have money certain places. Because when we get to level 4 and we talk about building your own banking system, you're like, well, how can I build the biggest bank? Well, you can build the biggest bank if you take back control of your money that's been locked up in these other types of accounts that you can't quote touch without getting your hand slapped. So this is the first time I see people question, oh shit, I might have some good numbers on a balance, on an account balance somewhere, but if I don't actually have access to that, is that really serving me and my goals when I get on a call with Jeff and Sean? And I'm like, well, what's your goal? I want to build wealth. I want more freedom. I want more control. Well, then, like, if you don't have liquidity, it's going to be a lot harder for you to get there. And so, yes, when you come in, where is your cash? Where are your assets that are easily converted to cash? Where are the things that you think in your mind are locked up, but you could access to them, even if you have to pay a little tax or get your hand slapped by the government and pay a little penalty? We just want you to understand, we're not telling you to liquidate those accounts like Jeff said. We're not telling you to sell anything. We just want you to understand fully what you could do when you actually start moving the needle and you start acquiring assets. And so when I came in, I basically had no lines of credit, right? I had credit cards, pay those off in full. But then I started learning the game. It was like, okay, let me open up a home equity line of credit. And this is like the big battle between like pay off all debt because all debt's bad versus wealth building. I'm a big fan of paying off certain debts, but not all debts. And so when you get in this mindset of paying off all debts, then you're paying down this mortgage on a primary residence. When that asset's not putting money in your pocket, it's increasing your net worth, but that's not putting money in your pocket. You could utilize that equity in your home and go acquire another home, right? And this is why I get so fed up and like I get angry to a certain extent on like, if owning your home is so great, why do you not want to own 10 or 20 or 30? And you could use your singular home that generates no money to generate money. And so when I came in and started working with you, the first thing I opened was a home equity line of credit. This was 6 figures of pent up equity. Then I started creating my bank. So I took my liquidity and
tell everybody though, when you open that line of credit, 1, you didn't have to use it. 2, you only paid any interest or payments on what you pulled when you pulled it. So you're not forced to do any of this stuff. And you're not strapped with payments when you don't know how to deploy the capital either.
That's right.
That's why lines of credit are so powerful.
My bank paid for the appraisal on my house. And then I paid like $300 of processing fee. And I didn't use the line. So to your point, I actually didn't use my home equity line of credit for months. I was focusing on building up my bank because that's level 4. So I did the liquidity part first, got my lines of credit, and then I built my bank. And then I actually we won't talk about it today, we'll talk about it on the next episode. I used my banking system to acquire my first asset. And then I got comfortable pulling from the lines of credit. So I've used my banking system to buy assets. And then 2 weeks ago, I pulled money. And this is the point I'm trying to make. I pulled money from my home equity line of credit to buy a property in Texas with my new business partner on the Burr property. Okay. When we cash out, refi that property in 6 to 12 weeks, my home equity line of credit is going to go back to 0. So think about this. This is how I'm trying to expand people's brains to go from, I want my home to be paid off versus you can use your home today to acquire another home. And then when you get that money back, you can acquire another home. So if most of your net worth down the line, according to these gurus, is most of your net worth is in your home, you should own more homes. Like, I'm asking that question. You should potentially own more homes. And so what's exciting for me is I acquired the home equity line, acquired assets. Then I got business lines of credit. Okay. Easily to move that money around. Then I have a line of credit from QuickBooks because my accounting is through QuickBooks. So they give you whatever. I think they gave me 21,000 on a business. Then I open up 0% APR credit cards for every single business that I have, right? Oh, credit cards, they're dangerous. They're just a tool. And here's one that we haven't said is family members, friends, high net worth individuals, people that trust you. If you show that you're a steward of money, they have money. So if you show that you're somebody that can go and get asset, these people will openly and willingly lend you money. That's one thing I had to open my mind up to recently. And like, okay, well, now I have people, not banks, people that will hand me money to go acquire an asset for myself, and I'll pay them back, right? It's like, and so now this whole world, you start thinking in terms of like, oh, I have $50,000 that I can in the bank that I can go to use and buy one property. And all of a sudden within the next couple of months, you might have $500,000. And when you start talking to people like Jeff, he's probably got access to $5 million. Then you got people that Jeff talks to that have access to $50 million. And it's all the same game. It's just how many zeros can you get behind it?
Yeah, I'm glad you brought that up because I didn't even touch like qualified plans and things like that. Like everybody, most of the people that we're going to work with are going to have some sort of 401k, some sort of Roth IRA, something that their parents told them they should be investing in, safe and secure. And there's formulas you can use to determine the liquidity or the amount of liquidity you would consider with regards to that. And I just use the formulas that underwriters at banks use. And so that those do count. We definitely don't push you in any direction as far as like liquidating any of that stuff, but you should understand what's there and then what that looks like if you went through the process of cashing any of that out, what the penalties are, because then you can always weigh the whole picture and understand what you're doing. So thanks for bringing that up.
Here's one and I'll talk about what I did personally. Again, we don't push anyone. We educate people and they make their own decision. What I did was when I stopped being a teacher and then I started to generate wealth, I looked at my Virginia retirement system account and it had like 15 grand in there. And I wasn't going to go back to teaching. I wasn't going to add any more money to it. And that was only after 5 years of teaching. And it gives you your little estimate. And it was like, oh, in retirement, you can pull $178 a month from this retirement account. But if I pulled the money, I would be taxed and penalized. So I'm losing 40% of the money. Oh my gosh, I'm losing 40%. Well, at the end of the day, 15 grand with respect is not that much money. And number two, if I pull that money at 30 to 35 years old, do I think I can make more than $178 a month if I put that money to work, in the next 30 years? So the answer was yes. And so anyone that follows me on social knows that I have absolutely zero of my own dollars in any qualified accounts and nothing in the stock market. In the same breath, I'll tell you that my wife still has a 401k. So what we're doing is what we're teaching you guys here. We understand her 401k right now. We understand the pros. We understand the cons. We understand that we could pull up to a $50,000 loan against that 401k. We haven't done that yet. We understand that we could liquidate it, pay taxes, and pay a penalty. We haven't done that yet. We don't need to, but we've had conversations on what situations would we be willing to pull a loan and or liquidate that account, because we have other assets that we believe in more. We just haven't gotten to that point. Now, someone could argue that if we wanted to move faster and get to our goals faster, we'd liquidate it now. That's fine. I understand we can do that. It's not about doing it. It's about understanding that you can do that and that we're willing to do that. We're not willing to do it right now, but someday we might. We probably will. So guys, just understand the rules and regulations. Some people how many people have you talked to that literally think all that money is untouchable? It's touchable. You can touch it. It just depends on what happens once you do touch it. Just learn the rule. Just call the people up and ask them.
It's a taboo subject. I want to mention two things before we close this out, because I think we did a good job covering it. I think we hit all the nuances that we wanted to. We are not licensed financial advisors, number one. And if you're pulling business lines of credit, you need to be pulling in your accountant on those situations, because you're generally going to write loans to them that need to be paid back to the business. And that needs to be structured from an IRS standpoint through your account. Make sure you're communicating all this stuff with your financial team. So I think that would be irresponsible not to mention that, because we can't sit here and say you should pull a bunch of business lines of credit and not tell people what they should be doing with it. Be aware of that, and pull your accountant in and make sure that they're aware of what you're doing and why. make sure your business is healthy and solvent, obviously, and let us know if we can help you. We're in the Tactical Empire community. It's a free group. If you have any questions, hit up Sean or I. Our handles are on here. You can reach us anytime. We're game for any questions. Have a kick-ass week and go out there and make the world a better place. Have a great day.